Let's talk about the short interest in medical properties trust. We will take a look at how it has changed over time, and we will put this in relation to the current market cap of the company. So as you can see right now, the stock price has dropped by 37% year to date. This puts the company at about 4.3 billion in total market cap. And in terms of how much the company is actually shorted, we can find that data here on MarketBeat. So in terms of total shares sold short, this is the highest amount it's been in quite a while. Just scrolling down here to 2021, we can see 30 million shares being shorted, and if we scroll up to the latest report here on the 15th of August, we can see about 130 million being shorted. So a huge increase in the amount of shorted shares. In terms of total value, we can see dollar volume of the sold short shares. It's almost a billion. It used to be a billion, but stock price has dropped, so now it's below a billion, even though the total amounts of shares sold short is in fact larger than it used to be now. So this is due to this price in share drop. In terms of news around this, I found it quite suspicious with this Wall Street Journal article talking about cracks deepen for America's biggest hospital landlords. The tenant here, one of the big tenants of Medical Properties Trust, the timing was extremely well executed on releasing this report, and the language in it reminds me a lot of a Hindenburg short seller report, basically. And one of the insights that I would like to share regarding this, I think this can be good for especially newer investors to hear. I think that a lot of the older gentlemen following along on this channel have heard this before and realized it in their trading career. But a lot of this financial news is actually written by PR firms. In terms of how it works for the journalist, they have a quota, like a weekly quota. They need to write, let's say, 3 articles. And then if one of these PR firms comes to them, they have a relationship ongoing with like a completely written article that's, done. It's written. They just need to put their name on it. Well, in a lot of cases, they will just do this. So I'm not saying that this is the case for this one. However, coming from a business school background, a lot of my friends went into different sectors in business. Some of them went into PR. So of course we talk business, we talk shop, and I hear how things are done. So that was one of the things that caused me not to really look at the news. I look at them when you guys comment below a video and tell me, hey, Andreas, take a look at this news, what do you think about it? And of course then, if it's something juicy, if it's something I think will be beneficial for you guys to listen in on, then I will make a video covering the latest around that. So as we can see for Medical Properties Trust, a sharp decline in the stock price. They're cutting dividend, of course. I think this is a prudent move to conserve more of the free cash flow in the company and be able to bail out the tenants here that are in trouble and prop them up until the sector turns around, and then being able to get larger gains for shareholders in that case. But a prudent move. I think that we could see a even greater drop going forward with the increase in short interest. It doesn't seem to be going away. Remember here, we're seeing the amount of shares sold short at the all-time high. However, it will come a time when the shorts will need to recover, will need to buy back the shares, and of course this will be a positive catalyst. But until this happens, I think we will see a repressed share price, and this can go on for a long time depending on the macro. Right now the property sector is in hot water. It's really popular to short different property companies. It's like that not only in America, but also over in Europe, where I'm from. I see it in Sweden, I see it in Germany. I see it on a lot of the property companies that I do an analysis on. So medical property trust, no different. They're not unique in any sense in this way. Large short seller interest. And it's dangerous for these companies when they have debt and interest rates are rising. And it's clearly a compelling case for short sellers where they could make a lot of money on these fears with investors selling out. I just want to point to another piece of data that I got from brokerages in Sweden. So in terms of shares bought and sold, they like to post on their Instagram, for example, Avanza, a Swedish broker, most sold and most bought shares. And for last month, one of the most sold shares was a property company called SBB, with a lot of short seller interest, with some negative coverage in the media. So definitely nothing unique going on here with one of the largest providers for medical establishments in terms of the properties that they use. They're having exactly the same treatment as property companies in Sweden. So that's my whole take on this. I think that, of course, with all the risks, the stock price deserves to be lower. However, in terms of value, I think that there's potential for large upside in this company, as there is with a whole lot of companies in the property sector right now. I think we also saw Warren Buffett buy a ton of home development companies, shares in those in the latest filing that he had. So it's not only me who see opportunity in this sector. There's a lot of investors much smarter than I am that's also taking advantage in this. So in terms of what to do, of course, you need to look at your own risk tolerance, do your own due diligence, etc. But as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.